What is good, guys? It's Rey-Jay back with another video, and this one I want to talk about the S&P 500 and SPY and breaks down what I see happening for the trading year, why I believe it's very probable for there to be a correction that's coming. The market's going to see some downside, at least for the first half of this year, but I think the second half of the year is going to be much stronger. I'm going to break down exactly why that is and why I think the election year is going to have a big effect on how the market ends up moving. But before I break anything down all this information, before I get into any more details, let me just mention a couple of things. Firstly, I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you are guaranteed up to 5 free stocks. If you deposit $1,000 into the account, you're guaranteed up to 15 free stocks. Anyways, now let's just talk about the charts and break down something very important, at least about how the market is moving. So I want to call out some very important levels. If you look at the SPY chart, let's actually pull up SPY real quick. You could actually kind of like relate a lot of this to SPX if you want, but the reason why I prioritize SPY is because this benefits a lot more viewers. More people trade this in retail than SPX specifically. So the first thing you'll notice on SPY is something very simple, right? Notice how we have all these gaps on SPY. We have a bunch of unfilled gaps on this thing, right? We have this gap right here. It's a little hard to see. We have this big gap down here at this 440 area. We have more gaps down here in like the 430s, 420s. Are we going to crash or at least retrace all the way back down to those levels before we try to, break out again? We don't have to fill every single gap though, and I'm going to be breaking down where I could see us retracing to. So from my view, okay, we have an election year. And remember the thing I told you guys about, even like last year, I was saying that for 2023, we're going to close the year strong. I couldn't call every single move perfectly when it came to like November and December, especially because the market just pumped and pumped almost nonstop. But let me just say that I was correct. I was correct back in October when the market was tanking. I told you that there's going to be a November squeeze coming. I told you the market's going to close strong. And I was correct about that. And I think one of the main reasons for that was because of how much people were shorting the market. That's one factor. Another factor was the election year. Because, if we had this big, big crash right before the election, this would hurt a lot of these politicians and these candidates. That's just another big factor. Not to mention the shorting, not to mention the technicals, and the list goes on. So when I called out the monthly on SPY, and I mentioned we had a nice cup and handle forming, if you look at it, right, I said this months ago. I was saying it back here in September and October. We got the cup, we got the handle. It played out very nicely. And I believe that because the market pumped so hard in November/December with no pullback, we're due for a pullback very soon. And I think that the market's going to pull back. I think the market may even see a correction, but I don't think it's going to last. And I think that we're going to see history repeat itself. I predict we're going to see a pump and dump market. I predict that the fear and greed index is going to be a very, very good gauge this year because when people become way too fearful, we're going to see insane amounts of puts being bought again. Everyone's going to be screaming crash, 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 just like they did in 2023. But did the stock market crash in 2023? Well, we had a moment where we saw this nice pullback, it's 5 to 8% pullback, but then we saw the buyers come back, and I think we're going to see the same thing next year. And the reason for that is because, first off, the market is very fast to price things in. Look at how quickly the market priced in the rate cuts, the rate hikes, We priced in the rate hikes and everything back in October 2022. And yet the Fed was still raising rates. They already priced it in. The market's been rallying since. We've been on an uptrend. SPY is not at 341. It's at 460 right now. So it's been pricing in everything. It's super, super fast, lightning fast. Okay. I can't predict if there's going to be a war or something that has to be priced in, but I do believe that the market's going to price in a recession very fast. I think it's going to be very quick. So if you take our Fibonacci retracement tool, you will see that the 0.618 retracement happens to be around this 435 area. So I think that assuming the top is in, I don't know if the top is in, it likely is in at this point, but I think that as the year goes on, all right, there's a very good chance we're going to reach that level. I think 440 to 430 is going to be coming back on SPY. I think there's going to be a very good buying opportunity this year. And then I think that for the second half, I think that for the first half, we're going to be pricing in the recession. That's like my general view right now. And then the second half is when we're going to see short covering. We're going to see shorts get squeezed. We're going to see the market just run once it prices everything in. And I have a feeling it's going to be preparing for some pain. So how could this play out? So let me just give you guys like a visual representation of this. I wouldn't be surprised, and I can actually take this in two different ways. So I'm going to try to do something a little bit differently. Uh, from this point on, since we don't really have a retracement, if we presume that we're going to be, grabbing liquidity down here at this like 436 area again, just hypothetically, we can actually take our trend-based fib extension tool and kind of like redo this. So if I actually go back to this top here, we could actually kind of extend this out just like this, depending on how low we end up retracing to. But basically, and as crazy as this sounds, I think we're going to see new all-time highs this year. But, and that's the thing you have to remember about the market. It's okay to be a big bull because the bulls typically have the edge. So I think we're going to do something like this. I think that January is going to see lots of volatility where we're going to go back and forth and back and forth. We're going to see the market sell off more. And I think that we're going to see a lot of consolidation around February, but then by March, we're going to see a bigger sell off way down like this to 450 or so. I apologize if this is like kind of zoomed out. I could try zooming in a bit more, but I'm zoomed out just so that I can draw out this whole year. I could actually just do this so it's a little easier to see. But anyways, then I think by the first half, sometime April, May, we're gonna see this thing. We're gonna see some relief rallies like this first, of course, and then we're gonna see like this correction, right, back down to at least 440 to 430. I think we're going to see the market correct during the first half of the year with lots of consolidation, trading sideways, and it's going to price in the recession. Now, I don't know if we're going to go all the way back down to 420 to fill all these gaps down here. This will depend on so many different factors from, any wars, how severe the recession is, the economic data, inflationary data, when the Fed starts cutting rates. But I believe there's going to be another buying opportunity. And just like what we saw this year, when everyone, because imagine the market actually does come back down to these lows, and imagine our fear and greed index goes crazy. All these people start saying they're fearful, the market's going to crash, this and that. Then what's going to happen is, this is my prediction, the put to call ratios are going to go insane again. I predict that, especially during the second half of the year, everyone's going to turn into a bear. At least the majority of people, they're going to say the crash is coming. Everyone starts buying puts. All these institutions start hedging with puts. There are a lot of instances, like in September, where we have 3.17 put to call ratios already. We're already starting to see hedging going on. So, what I'm thinking is, I think that the market is going to see a correction in the first half. This is going to be like a kind of like a scare just to turn everyone bearish. And I think SPY will reach at least 435 to 440 at the very least. It could go lower, it could go maybe a little higher, at least 440, but it all depends on different factors, which I can't really predict. And then once the recession is priced in, the market's going to start a very, very strong V-shaped recovery, a strong uptrend. There could be moments like this where it starts to correct just a little bit, and then we just continue to rocket, just like what we saw at the end of this year, to new all-time highs. Now, how high could we go? This is going to depend on how low we go to. I wouldn't be surprised if we break past 500. That sounds crazy, but remember, guys, I sounded like a complete fool when I told you that the market's going to run very hard to end 2023. And ultimately, my little theory of us having a cup and handle on SPY was correct. The cup and handle played out. Look at this on the monthly. It did play out. So I'm now telling you that there's going to be a trap, a massive, massive trap that's going to be forming. They're going to try to turn you into the biggest bears ever this year. I think that they're going to have some success because the market's going to correct. It is going to tank, guys. I'm saying the market will have this correction, but it's not going to last. And we're going to end the year strong, especially as we approach the election year. Look at this chart historically. When you look at the months from the election date, look at this. Historically, if the market does have a tendency of kind of like slowing down 6 months before it, or something like that, the market tends to rally after these election years or as we approach them as well. So this is like they tend to be very volatile heading into a recession and then rally thereafter. So I think and I think that they're going to try to price in the recession quickly so that when we get closer to the election year, the market starts to rally again, just like it did in 2020, just like it did for most years. There was an exception, which is 2008, but I don't think we're in 2008. The times are very different. And look at all the different years behind us. Historically, on average, the market tends to do well after the election year. It does have a tendency of kind of like trading a little with a lot of consolidation for some periods. But I think that they're going to do something different. They're going to squeeze shorts very hard. So I wouldn't be surprised if this happens. If you think this looks crazy, look at how the chart looked like this year. As you can see, SPY started this year with this nice little rally. Not this year, last year. We had this drop, another pump, big pump, drop, and it just continued. Right, a nice V-shaped recovery formed for the last 1.5 years. It's a V-shaped recovery. I think we're going to do something very similar this year. I find it very probable. It's because of manipulation and these different factors. They're going to squeeze shorts again. Okay, so first half, I'm leaning more bearish. I think there's going to be consolidation coming. Second half, I think it's going to be very bullish, and I think we're going to break all-time highs, and they're just going to squeeze the hell out of shorts. I think they're going to make the market look so strong approaching the election year that people are going to forget there even was some kind of correction, and they're going to just try to make it look like things are going well, just to trick these investors. That's my prediction for 2024, guys. Hopefully, you guys found value in this video. I went over some data. I didn't go into the full details of it, but I just wanted to make this very brief and very broad. And I think that what's going to happen is inflation is going to continue to downtrend, whether the numbers are valid or not. The Fed is going to pivot, and this typically happens when there are going to be economic hardships, especially as we're starting to see contractions in the labor market. There are going to be contractions. The market is going to correct, but it's going to price everything in quickly. It's going to be fast, faster than you're expecting. It's going to be quick, guys. We're not going to crash the whole year when there's a big election coming. We could tank for for the next 4 months, few months. There could be some downside consolidation and downside. But when the second half comes, I think once we get to June, we're going to really start to see the bulls come back. And as we get closer to the election, a big, massive squeeze is coming. They're going to squeeze shorts, and they're going to continue to just trick as many people as possible. That's what I believe is going to happen. That's my view, guys. Thank you for listening. I could go into way more details, but I don't really want to because I can't predict every little detail. I could attempt to do so, but I can't be perfect. So just take this with a grain of salt. That is my general view of the market, starting off kind of weak and then finishing very strong. And I think the market's going to just continue to squeeze those shorts as it benefits those market makers. I think the market's in cycles, right? There've been a lot of periods where people start shorting like crazy. Then they start pumping the markets hard. And then when everyone turns too greedy, they correct it just a bit. So I think that's what's going to likely happen. I think we're getting ready for a massive run. The market might tank first for the first 6 months, and then we're going to get the run later. And I think 2024 is going to be a strong year. That is my prediction, guys. Thank you all so much for listening. Have an absolutely spectacular rest of the day, and I'll see you guys once again on the next one. Thank you, and peace out.